Welcome back to our next educational series, and in this video I'm going to talk about how to use Fibonacci the right way to plot entries and target. Well, before further ado, I'm Alex, your technical analyst from FundYourFX, and let's go straight to the chart. What is Fibonacci in trading? Fibonacci is a tool to project potential pullbacks and extension in trending markets. The Fibonacci level that we often will use is golden ratio, 0.618 for internal retracement and 1.618 for external retracement. About the internal retracement and external retracement, we are going to discuss in the next slide, and we are going to do some live trading on chart or live study on chart. And there is also 38.2% ratio and 50% Fibonacci ratio, while different levels have the different use case, of course. Also, there is types of Fibonacci retracement method that you can use. The first one is external retracement for bullish and bearish. The coding is XAY. You should be remember this. And the internal retracement for pullbacks for bullish and bearish, it's XAB. Okay, the type of Fibonacci retracement, the first one is internal retracement or XAB. This is the XAB. Okay, should be like this. You are going to measure the pullbacks. Okay, the pullback level for bullish continuation. This one, the pullbacks. Okay. This one for the bearish continuation, XAB for bearish continuation. The main key point for the internal retracement used for measuring the pullbacks right here. This is the pullbacks, and the previous slide, this is also the pullbacks. Okay. The external retracement or XAY, it's used for measuring primary targets level for bullish continuation. This is XAY. The Y is our target point for bullish continuation. Okay, this is for the bearish continuation. For our target, you have to remember, for external retracement, you have to use it for measuring primary target level for bearish continuation. Okay, so let's go straight to the chart and let's do some live study case. Okay, let's do on the UK oil. Should be very simple. Let's start with internal retracement. You can see, before we are going to go with the internal retracement, let's draw the swing line. You should draw swing line to use the Fibonacci tool, because if you are not drawing your swing line, you are going to be confused. Which swing should I pull, or should I take the point as our pivot point? Okay, here the price already moved in short of bullish momentum, but it haven't been validated yet on the daily chart. Right now we are going to see, let's do some external retracement. When this bullish continuation will stop, let's do some external retracement with Fibonacci. This is Fibonacci tool. You guys should have remembered XAY. We are going to project the Y. Okay, so the first one is pull from the top or the peak to the low right here, and then there you go. This is 161.8%. This is our golden ratio. If I want to see more of the levels, we can go here. Okay, the settings of the Fibonacci on trading view. We can use the 1.272. Okay, and then we can use another, let me check. Okay, this one 2.618. And yeah, that's it. So for the level that you have to keep an eye for in the external retracement of Fibonacci is the first one, 127.2 or 1.272. This is our first target, because after the price hit this target or hit this price or hit this target, often the time that the price will reject or make false break. If the price haven't rejected on the first target, which is at around 1.272%, so your next one is the golden ratio, which is 1.618. Okay, that's the idea. Okay, so this is the external retracement. How to use external retracement? So you have to put your point, your pivot point on the X. This is the X point. The peak is X point. A, you have to drag it down to the A point, and then Y is your target. Okay. Okay. Next, let's check this out. Let's say that this one should have not made like this, or this period of price should haven't been validated yet, or this rejection hasn't been validated yet. So let's check this out and let's pull for the internal retracement for the bullish continuation. Bullish continuation should be XAB for internal retracement. You want to measure the pullbacks. Okay, the pullback should be like this. This X. Okay, this is A. Okay, this is B. For the levels, you have to turn on the 0 point something. Okay, this one 0.382, 0.618, and 0.5. And if you want to turn on the 0.786, you can also use this one. But for Fibonacci, tendency that I will use the 50% or 61.8% Fibonacci level. Okay, look here. Remember guys, this is XAB. We are going to measure the internal retracement for the pullbacks for the bullish continuation. So look here. We're seeing right here 61.8, the price touched 61.8. Well, a little bit of the falling, the false break, and then it rejected nicely, and the price right now makes the bullish momentum right here. Okay, if you are seeing closely right here on 61.8%, we also see the demand zone or the unfilled order zone aligned with the Fibonacci tool. Tips and trick for you guys: if you are seeing the golden ratio on Fibonacci aligned with the classic support or classic resistance or maybe supply and demand zone, that one is the strong level. Okay, if you are going to get more advanced on Fibonacci, we are called them as the cluster Fibonacci, but it is so complex. I'm not going to teach you about that because it was very complex. But if you are getting interested in clustering for Fibonacci, well, I'm going to make the video for you, but it's so complex for you right now. Okay, next we are already discussed about internal and external for the bullish momentum or bullish continuation. Right now, let's go on to the bearish side or the bearish case. Okay, let me check it first on our chart. Wait. Okay, let's see. This is not the cleanest. Let me check. Wait. Okay, let's use this one. Okay, this one is the bearish one, the bearish market. Let's draw the swing point. Okay, swing point. We're going to skip this because this is the minor movement. You should have known if I say the minor or major movement, because I have been made the major or three phase of market on the Dow theory that I have been made last couple of weeks. Okay, you should have known already which is the minor trend or which is the major trend. Okay, this is enough. This is plenty of data. Okay, first one, the price already reject, or the price already on the bearish momentum, and right now our guess or our technique is to measure this one, internal retracement for the bearish continuation or the bearish pullback. XAB for the bearish, you should take your pivot point on the top one. X is your peak rather than on the internal retracement of the bullish continuation. X is your trough. You have to swap its position, of course. Okay, so this is X, this is A, and this is B. Look here, another one, 61.8% has been hit. Aligned with, we can see this is the supply zone right here, and the supply zone aligned with the 61.8 and 78.6%. And of course, the alignment or the clustering of the Fibonacci zone or Fibonacci level aligned with the classic support resistance, classic supply and demand. It should be very strong level. Okay, right. Now, what if you are already entered here? Okay, we see a rejection and a valid rejection on the Fibonacci level aligned with the classic supply and demand zone. And where is our profit target? If you are solely use the Fibonacci level, you can use the XAY method. Okay, the XAY, we are going to use the external retracement method. So what you are going to see is your X, it's your trough, pull it up to the peak, the previous peak or the next peak, which is right here, and the Y it's right here. See, right around here, right around 1.272 right here, the price almost touched the level, and then it punched. Okay, if you are going to see right here, okay, if you are projected, if your take profit, you choose your take profit around 61.8, then 61.8 is getting hit. Okay, even though the price makes a swing, another swing. Okay, then let's see if there is another classic support or resistance that align with the Fibonacci level. For me, this one should be base, but not that strong. Actually, yes, of course, this is the resistance becomes support. The resistance right here, wait, let me draw it for you. Okay, look here, align very nicely around 161.8% ratio right here. This is very great example of the Fibonacci level really aligned with the classic support and resistance. So it's not random number or random tool that we are going to use to predict next move, but this one calculated by math. I don't know how this one is going to calculate it, but you can see the Fibonacci number. If the number you are going is, you are dividing the number after number after number, well, you are getting closer to 61.8%. You can see them bunch of video explaining Fibonacci number online, so you can check them out. Right now, we are going to discuss about the trading on the Fibonacci. Okay, so guys, well, I think that's pretty much it. Yeah, I think that's pretty much it. For the bonus, I will try to do some external retracement on this chart. Let's see. Okay, we already entered here. Before we entered here, we want to see the pullback. Let's see pullback. Okay, the pullback right now almost hit the 78.6%. Okay, and then wait, let me check. Oh wait, let me turn off my magnet because it's too strong. Okay, here, if you want to plot right here on 61.8, after the price make a false break on 61.8, and then it came down, but the price failed to continue, make an ABC correction. The ABC correction stopped at the fair value gap, fair value gap right here. Okay, and it was aligned with the 78.6% and 61.8% Fibonacci ratio or Fibonacci level. And right now you are already, let's say you are already entered right around here, and you want to find your target. To find your target, you are going to wait, or we are going to use the external retracement from Fibonacci tool. Okay, remember guys, for external retracement on the bearish continuation, X is your, wait, let me turn on my magnet. X is your peak, X is your trough, and then A is your peak right here, and then the Y, the Y right here, it's your take profit. See, look here, this is why Fibonacci, you can use Fibonacci for trading. It's not just a random number, but it really works because of math. Market move by math, market move by, well, numbers, of course. And look here, 61.8% works on the UK oil or on Brent. Right here, if you are entered here and then your take profit around 161.8 or 1.618% ratio, and your take profit target should have been hit unless your spread was high. Of course. Then let's see, okay, right here, the price align, look here. Wait, let me try for you. The price align with UFO zone or unfilled order zone right here. Wait, see, price align with the Fibonacci level. This is quite near because it was the clusters. The clusters should have been, well, on top of each other. It can be gap, but the gap should be this close. Shouldn't have been right here. This one, the gap, if the zone, the cluster zone, well, the range between the level right here and the Fibonacci zone is around here, so it should not have been a cluster. The cluster should have been look like this. The gap is very small. This can be, we can determine this as the cluster. Okay, so guys, I think that's pretty much it. Well, thank you so much for watching for this educational video for how to really use Fibonacci in your trading journey. It's quite complex. Please, if you are not understand this method yet, watch it multiple times so you can get the idea how the right way for you to use Fibonacci level in your trading journey. Guys, thank you so much for watching. Don't forget to subscribe, like, and comment in this video, and don't forget to follow our Instagram and TikTok so you can get notified if I made this kind of video, daily forex forecast, weekly forecast, and some educational video. Guys, thank you so much for watching, and I'll see you again in the next educational video. Bye bye.